$5,900. That's what the average Californian needs to pay every single month for a mid-tier home right now. And no, that's not a luxury mansion in Malibu. That's your average middle-class home. But here's the scary part. Experts are warning that California might be heading straight toward a housing crash. Prices are falling in some counties. People can't afford to buy anymore. And even those who own homes feel trapped. So, is this finally the big California housing bubble popping? Let's break it down. What's really happening? Who's to blame? And why even Governor Gavin Newsom can't escape the heat right now? The calm before the crash. California's housing market has always been wild. Sky-high prices, fierce competition, and bidding wars that feel like auctions. But right now, something feels different. For the first time in years, cracks are starting to show. According to recent reports, the median home price in California has dropped in several major counties, including Los Angeles, San Diego, and Santa Clara. Even though overall prices are still high, experts say the trend line is shifting downward. Mortgage rates hovering near 7.5% have completely crushed affordability. Back in 2020, a middle-income family could dream about buying a home. Now, they're lucky if they can even qualify for a condo. And that $5,900 monthly payment? That's not even including taxes, insurance, or maintenance. That's just to own a regular home. And it's pushing families to their financial limits. We're seeing what some economists call a frozen market. Buyers can't afford to buy. Sellers don't want to sell because they'd lose their low mortgage rates. And builders? They're pausing new projects because demand just isn't there. This is how housing bubbles start. Quietly, slowly, and then all at once. What's fueling the crisis? Let's talk about what's really driving this mess. First, affordability. California now ranks as one of the least affordable housing markets in the entire country. According to Norada Real Estate's October 2025 market update, only 16% of Californians can afford the median-priced home. That's insane. Out of 100 people, only 16 can buy a home, while the other 84 are completely priced out. Second, migration. People are leaving California at record rates. From San Francisco to Los Angeles, thousands of middle-class families have already packed up for states like Texas, Arizona, and Florida, where housing costs are literally half. That outflow means less demand, and less demand means falling prices, especially in expensive metro areas. Third, job uncertainty. The tech slowdown hit California hard. Layoffs from companies like Google, Meta, and Tesla have rippled through Silicon Valley. When high-income earners stop buying homes, local markets suffer instantly. And finally, interest rates. The Fed's aggressive stance on inflation has completely reshaped the housing landscape. Buyers who once locked in at 3% are now staring at rates over 7%, effectively doubling their monthly payments. That's not a sustainable market, that's a ticking time bomb. What the data really says now, not everyone believes a crash is coming. Some experts say this is just a correction, a cooling off period after years of insane growth. But here's the catch. When you dive into the data, it's not looking great. The LAO report from September 2025 noted that housing construction has slowed dramatically, while homelessness continues to rise statewide. That means California isn't fixing its core issue, a massive imbalance between supply and demand. You've got too few homes, too much demand, and now, falling affordability. That combination creates instability. And historically, every time we've seen this setup, high prices, rising rates, falling demand, it doesn't end softly. It ends with correction. Sometimes mild, sometimes brutal. The domino effect. Let's talk about what happens when the California housing market starts shaking. When home prices drop, homeowners lose equity. That's their biggest source of wealth. Once that wealth starts shrinking, people spend less. That hits local businesses, restaurants, and even schools. Real estate agents earn less. Construction jobs disappear. Property tax revenues drop, which means less funding for local programs. And that's when the government steps in. Enter Governor Gavin Newsom. Newsom has made housing one of his key priorities. He's pushed for new zoning reforms, funding for affordable housing, and even programs to convert commercial buildings into living spaces. But according to analysts, the impact has been minimal. California is still short over 2 million housing units, and the cost of building here is among the highest in the world. So even with the government's best efforts, the system itself is broken. The warning signs. There are 3 warning signs to pay attention to right now. Number 1, declining home prices in major counties. The Bay Legal Report points out that home prices are dropping fastest in counties like Alameda and San Diego. That's where the housing boom was strongest, and when booms fade, those areas usually fall first. Number 2, rising inventory. More homes are staying on the market longer. Sellers are cutting prices, offering incentives, and still not finding buyers. That's a classic red flag. Number 3, consumer sentiment. People's confidence in the market is fading. Buyers are waiting for prices to drop further. Sellers are panicking. And once fear hits real estate, that's when the cycle turns. What could save California? Now, let's be fair, this isn't all doom and gloom. There are a few things that could stabilize the market. For one, the Federal Reserve might finally start cutting interest rates next year if inflation continues cooling. That could reignite demand slightly. Also, there's a big push for new home construction in less populated areas, especially in the Central Valley and Inland Empire, where land is cheaper. And finally, tech could bounce back. If Silicon Valley revives, so does the demand for housing. But even with all that, the question remains, will it be enough? Why this time feels different. Here's the thing, California has seen slowdowns before. The early 2000s, the 2008 crash, the pandemic spike and cool off. But this one feels different because it's not just about real estate. It's about lifestyle change. People aren't just leaving because of high prices, they're leaving because of quality of life. Traffic, taxes, cost of living, and remote work opportunities have made other states more appealing. And that's something money can't fix overnight. Once people leave, they usually don't come back. That means the foundation of California's housing market, demand, may never be what it once was. What experts are saying. Economists are split. Some, like Norada's analysts, believe the market is in a transition period. Not a full crash, but a necessary correction. They predict home prices could drop 10 to 15% statewide before stabilizing. Others, including independent real estate experts interviewed by Bay Legal, warn of a deeper slide, especially if the job market weakens further in 2026. But both sides agree on one thing. California's housing affordability crisis has reached a breaking point. If the government doesn't address it soon, the social and economic consequences could ripple across the entire country. The bigger picture. Let's zoom out. California's economy isn't just any economy. It's the 5th largest in the world. If it sneezes, the rest of the U.S. catches a cold. A housing collapse here wouldn't just hurt homeowners. It could slow down the national economy. Banks, mortgage lenders, and even investors holding California real estate would feel the impact. That's why so many eyes, from Wall Street to Washington, are watching closely. Even Gavin Newsom knows the stakes are sky high. Because if this crash becomes real, it won't just define California's housing story, it could define his legacy. The takeaway. Is California's housing market crashing? Not yet. But the writing's on the wall. Prices are softening. Affordability has collapsed. Migration is accelerating. And people, even the ones who've called California home for decades, are starting to wonder if it's time to go. The question isn't if California will change, it's how much pain comes before it does.